Right, so today is the 21st of August 2015, and yesterday in the pre-market session you can see the market struggling with the 17,350, the market trading all the way down to the 17,200 and below, so over 150 points lost in the pre-market session. So when the official time opened at 2:30 p.m. you can see the market trying to trade back above the 200 level there, failing, and then running out of steam to the downside, even though we had the sell signal there, just grabbing the 20 points because the market didn't drive through the psychological level of 17,100. It's found support and we're starting to come back. So there's a profit in the first one there. Again, the clue is the market's got to drive through, as you've seen during the last few market alerts. We then see prices starting to trade back above the 150, but the short side has already been given a clue here with the 150 fall off, the previous day's fall off, that the long side isn't a very good one. And in particular, if we just wind back to Wednesday afternoon when we had the Federal Reserve announcement, you can see the market went up, and then that was the last chance that the market was going to go up. It was swept up on rhetoric, and then the short side has dominated this market, which is why you're seeing this particular signal fail with a 42 point loss as well, because of the weakness in the background. The market's short, as I've said, for a few weeks. We've had the rally up and now it's run out of steam. So we've got a failure there. The market then goes into the sideways range, and then for a recovery trade, because most of the time the Dow will actually sell off in the latter part of the session, and this is what we saw yesterday as well. So there's 44 points in recovery, I suppose, here of the 22 points net loss that we had following the 42 point loss after the 20 point profits, so finishing on a profit for the day, and then of course it goes a bit sideways and then we get the sell-off. Of course, on the overnight market things have got worse, and we've seen the market trade all the way down now to 16,800. We've broken the 17,000 psychological level, and things are only going to get worse from this point, and I'll show you why in just a moment. But in the daily chart, there you can see the market taking out the 17,276 yesterday, and also taking out the low of the test bar at 17,124. We have selling in the downside again, just to remind you of that. No buying in the upside, but selling in the downside. So we can see this as well. We can remove these extensions here as well. And also, again, just to remind you, we're below the average lines, the death cross of the 200 over the 50. Prices continuing to move lower below this, first time since 2011 as well. And the reason for saying that we can expect more on the downside, 1779 for the implied volatility. We're looking around 24 on this figure now for the market to stop to the downside. So the short side is going to be the best side as far as accelerating is concerned. But we do have this issue, if I just switch back, of the overnight market already having dropped over 100 points, 150 to be precise, as the market is struggling to hold at this time. So we see prices coming back to the 850 level there, that's 16,850, but it will be interesting to see what happens during the rest of the day as we go into the weekend. Friday's generally quiet, but given the backdrop of the market at the moment, we could see a bit more to the downside. Right, that's it from me. And just to clarify that, you only want shorts off a rally as well. You want the market to rally up, fail, then come back through, because then there'll be an exhaustion point as well, or lack of momentum to the upside. Right, I'll see you in Monday's alert. As ever, thanks for watching and also for your support. I shall see you in the next one. Thanks for watching.